Hello, I'm Deborah Aitken. I'm the Global Luxury Goods Analyst for Bloomberg Intelligence.
And I'm Tatiana Bellometti, a Senior Credit Associate covering consumer.
And we're here today to talk about Kering on both the equity side and credit side.
So Deb, from an equity perspective, Gucci has undergone a 3-year growth hiatus. How quickly do you think the brand can regain sales growth following Demna's February fashion show?
The brand has struggled, Kering itself has struggled because of how big the brand is within the group. But I do think that actually under the new CEO, Luca Di Maio, since September, that we are making inroads. We are seeing brand transition starting, a lot of changes in the pipeline. We also have Francesca Bellettini, who has joined as and changed role actually, but moved over to the CEO of the brand of Gucci. So we see lots of things moving in the right direction. Gucci brand visibility, for example, has really picked up. They said that in the Q4, there was now 60% of newness from carryovers and revamp of Gucci classics. And also that's joined by a drop which took place at the end of October through the first part of November. And that's really put some Gucci perspective back into the market, more visibility back into the market. So we see that positively. That was followed, if we think about the Gucci creative director, Demna, he came in from Balenciaga in July. So his first full collection was launched at the end of February, which will hit the stores in autumn-winter 26. It was generally well regarded. There's some aesthetic towards history, towards the Tom Ford era, some newness, sharp lines and others, so really coming to the fore. And we noticed within those collections when they were shown that there were a lot of big names following what was happening with the Gucci brand, so that hopefully holds some promise. So we expect Gucci to return to growth in Q2 at around 2 to 3%, for momentum to build through that 2 half, helped by more revamp, newness and the new collections coming through. But if we think about where it gets to in terms of full repair, maybe that's a 3 to 5 year program. Because the brand and the sales actually fell away quite heavily over the last couple of years.
Hi everyone, sorry for interrupting, but I'm Jeremy. I'm the producer for Bloomberg Intelligence's YouTube channel. And I just want to bring you a message, as these videos are brought to you by an amazing in-house team right here at Bloomberg. We really believe in bringing you the insights needed to help you understand the finance world. And to help us carry on doing that, subscribing, liking, commenting, sharing really helps us out a lot. All right, with the admin out of the way, let's get you back to the content.
You mentioned briefly about Luca Di Maio, the new CEO. So Kering's obviously had some management changes and a shift there last year and going into this year. So how do you see kind of operational changes, and how do you think that can have an impact on margin improvement?
When Luca Di Maio came in September, we saw Francois-Henri Pinault take chairman-only role. He'd had both roles. So the dual deputy CEO roles were taken away once Di Maio arrived. And we saw Francesca Bellettini, one of the deputy CEOs in charge of brands, shift her real focus and become CEO of the Gucci brand. We think that will play out very well. She's very well regarded in the industry, and we think that's a positive for the brand and the company overall. We then see under her Demna's collections and the way that we expect him to work to be positively adapted and to be quicker into the marketplace. And so we're seeing that them working together can really drive positively for the brand overall as well. We then move on, and in March, actually, so just recently announced, we have 2 new roles: Chief Industry Officer role, and then also a Chief Client Officer role. So we should see shared services more and more for manufacturing, for supply chain, upstream as well as downstream. So some cost savings there to help those operational performance, operational leverage running from hopefully more sales growth and then savings within the business. And then on the back of that also from the client officer role, we expect an improved CRM. We're looking for improvements across marketing structure. And many other savings to be made, operationally, flexibility and others. So positive we feel in for both of those new roles. They'll come at a cost in 2026, but we think we'll see full benefit 2027. 2025 also saw renovation in terms of aesthetics and creation. So aside Demna for Gucci, we have new creative directors also for Balenciaga and Bottega Veneta. So again, we're hoping for new designs to come through, freshness, spark, acceleration and energy to really persevere into the year ahead, with much of that really benefiting the first half of 2027. Another thing that I would pick on would be disposals. So actually, and this is quite a quick transfer, but we saw the build-up over the last few years of Kering Beaute, one of the additional divisions under Kering Group. And actually, the plan is by the end of half one that the group would have sold Kering Beaute to L'Oreal for 4 billion. That passes the Creed acquisition, which was 2023, over to L'Oreal, as well as license for several of Kering's biggest brands, including Bottega Veneta, and also for Balenciaga, for Alexander McQueen and others. What it doesn't get yet, but we think it certainly will get by 28, if not before, will be the license, the beauty license from Coty for Gucci. And that will be big for business. We actually think that from a profit perspective, that can be better for the company, because if we look at what L'Oreal's done with Kering's second biggest brand, Yves Saint Laurent, we have heard recently on reports from the CEO of L'Oreal that actually the sales for the beauty division of Yves Saint Laurent are over 3 billion euros. So they equate or are more than the rest of the business of YSL. And then aside from that, if we think about how much more flexible it will be about exits from some more of its real estate businesses and others, we think that this can help the company to focus at the core.
So shifting gears to revenue then, the Asia Pacific region contributed 29% of Kering's 2025 revenue, and that's down from 38% back in 2020. So what do you see the demand outlook for China in 2026?
So we know that we've had 2 heavy years across the global luxury goods industry from China, 2 years of decline. We saw them start to come back at the beginning of 2023, but we've had 2 years of double-digit decline. What we're looking for 2026 for the global industry overall, luxury industry, as well as for Kering actually, would be low mid-single digit growth. So we'll say around 4 to 5%. And that would be really brought from the high end and from newness as well, and from key categories. So we think Kering can become part of that, particularly through the second half of the year. So in the first half of the year, against big negatives, year on year, comparable, we're looking at around 2 to 3% growth in the half one for Kering in China, and then for that to build momentum through the second half of the year. So that comes off the back of the Chinese cluster being down mid-teens in the 4Q, but Asia Pacific having shifted from -11 in 3Q to -6 in 4Q for Kering Group, helped by Hong Kong, China, Taiwan and Korea. And we think that that can continue to build momentum, albeit at a slow pace. So shifting across to you, Tatiana, from a credit perspective, Kering carried out joint ventures in 2025. What do you think that does to leverage at Kering Group going forward? Do you see it as positive or negative?
Kering's joint ventures in 2025 definitely do help reduce Kering's reported net leverage towards its 1 to 2 times target, but it reports unadjusted net leverage. And from a credit perspective, we want to see how net leverage winds up adjusting for leases. So looking at Kering's joint ventures in 2025, which included its Paris and New York real estate properties, as well as assuming that it may carry out a JV, a similar transaction with its Milan property this year, we could actually see leases increase by about 30% from 2024 levels. And so actually, when looking at pro forma adjusted net leverage from that perspective, and also including the sizable disposal of the Beaute this year, we could see adjusted net leverage around the low 3 times area, reducing from the 4x area prior to the Beaute transaction. So we would just want to highlight the disparity between adjusted net leverage and net leverage unadjusted as per Kering. So even though there could be a deleveraging trajectory with the Beaute sale mainly in 2026, the lease costs are increasing, and that's what we would be wary of from the credit perspective.
Do you think the deferral of the call put options on the 70% Valentino purchase are a positive or negative?
So I think Mayhula's deferral of its put option from 2026-7 to 2028-9 and Kering's deferral of its call option to 2029 from 2028 does definitely add financial flexibility for Kering. Gives it time to revive Gucci and also for Valentino to rebuild because it's having sales troubles and it also breached some of its covenants as well. So that is a positive, but we would need to have a few considerations from the credit perspective. So it is possible that Kering could be forced to purchase the remaining 70% Valentino stake in 2028 via Mayhula's put option. And if this is the case, we could see existing execution risk at Kering rise. And we'd also have the question of how would Kering finance the around 4 billion cost of the Valentino stake? It could be a mix of cash and debt. And looking at consensus free cash flow for Kering in 2028, it's around 2.6 billion. So we could see a partially debt financed deal for the remaining Valentino stake. But these are considerations that are still uncertain.
Kering's bond spreads have tightened recently and trade broadly in line with the Euro Industrials Index. Does the market know something we don't?
That's a good question. And we do see Kering spreads may be overly optimistic and that bondholders might be pricing in a more positive medium-term outlook for the bonds. But we want to caution that Kering is still very much a show me story, definitely in 2026, with the Gucci brand and with Kering still very much being on its deleveraging pathway. So we do see limited cushion for spreads in that regard. So we would want to see more of a recovery at Kering for maybe spreads to justify where they are now, but we do think maybe that recovery could be more of a 2027 story.
Thanks for joining me today, Tatiana. It's really interesting to talk both equity and credit side, and I hope we can do this more. Thanks everyone for joining us, and if you'd like to read more and follow us, we're on BI LuxG, LUXG, where you'll find both equity and credit updates.